We have the management with us as well. Mr. Ashok Kajaria, the CMD of Kajaria Ceramics, joins in to talk more about the numbers. Mr. Kajaria, thank you very much for joining in. First, wanted to start by asking you about the volume growth this quarter, sir. How much did you clock in, considering that your revenue growth has been in single digits? Compare this to around 13% last quarter.
The volume growth, as far as the revenue growth, has been 8%.
Yeah.
And roughly we lost about 2% because of the floods at Chennai. But otherwise it could have been 10%. But of course the market conditions are very tight, as you know, in India. Things are still on the ground level very, very tough.
So what is the volume growth been, 8%?
8%.
All right. Mr. Kajaria, another thing that I also wanted to know is that this sharp margin expansion that has come about on account of lower fuel costs. Can you tell us whether this will sustain in the year going forward? And what is your margin outlook for FY17?
You see, it is definitely going to sustain. The lower fuel cost has only come from 1st of January. But earlier we were taking partly RLNG and some spot gas, which has come down, which is a mixture of about $12. But the full effect will come from 1st of January 2016.
Okay.
And going forward, we see a margin improvement definitely.
Okay.
And part of this margin improvement, we will pass on to the trade. Part we will do on ad spend. And partly we will keep to the company. And we are looking at a scenario where we should have 100 basis points margin growth in the coming quarters.
100 basis points, so it should go up to around 21% thereabout?
Yeah. Right now our EBITDA has been about 19 point some odd percent.
Yeah.
I think we should look at a scenario where we should be 20 point something plus.
By when?
Going forward.
All right. Could you also give us a sense of what your current capacities are, in the sense what your JV capacities are and what your capacity utilization is?
See, we have a total capacity after installing the latest plant at Thanagaji is about 68 million square meters. And if you look at the total scenario, we are utilizing roughly about 92-93% of our capacity in totality, but some plants are running at 100%, some plants are running at 85%. So overall, it's about 92-93% utilization of the capacity.
Okay, so 92 to 93% of capacity utilization at this point in time. Sir, can you give us a sense in terms of when you meant passing on a little bit of the raw material benefit or the lower fuel costs, would we then possibly see you cut prices going forward in order to maybe even boost up volumes, considering you've got that cushion from the margins?
Normally what we do, instead of cutting prices, because whenever we cut prices is a direct loss to the dealers also. We have 1,100 dealers across India.
Okay.
We give them an incentive scheme to sell more, where we give them more discounts. That it's a win-win for both, for the dealer as well as the company.
So are you contemplating that?
Yeah, we keep on doing it whenever, you see, these kind of effect, gas price reduction has been a major thing for us. So we have to do it to take care of the competition as well as to see that our market share remains the same and goes up slightly.
All right. Could you also give us some sense on the anti-dumping duty which is expected? So what kind of number are you looking at to protect your sales, and how much will your sales be positively impacted by that anti-dumping duty?
See, anti-dumping duty is basically for vitrified tiles.
Right.
It has already been initiated on 13th of October 2015. And we hope to have the anti-dumping duty very soon, possibly within the next 30 days. Another day I heard Mr. Abhishek Somani saying the same thing, and I think we are on tune because the entire industry is together. And we are looking at a scenario where on the basis of data which has been given to the government, it should be around $3 per square meter, which will make it difficult for the Chinese people to dump polished vitrified tiles to India.
Okay, but how is demand looking at this point in time, Mr. Kajaria? What kind of trends are you seeing in the market? 8% volume growth, but that was also because of the Chennai floods that was impacted. The overall scenario, if you could give us a sense?
Overall scenario is positive. As days pass by, I think the demand is improving. The builder segment is still tough, but from government side, orders have started coming in. I think government has started spending money on infrastructure. We are seeing part of that coming from all over India. And I think going forward, things look positive as far as I'm concerned. I see a positive scenario.
Okay,
so in that case, could you give us some revenue guidance going forward? I know you don't, but you've always maintained that 5 to 6% above industry. In that case, give us that guidance at the same time what you expect the industry to grow at.
Industry has been growing at 11 to 12% in the last 14-15. The year which is going by, 15-16, has been one of the toughest. Industry should do about 10-11%. But going forward with the reduction of gas prices, I think industry will definitely jump up by 2 points, definitely.
Okay. Just before we let you go, based on that only, I didn't quite catch your volume guidance going forward, as well as your realizations, which you might possibly be guiding the street for maybe in the fourth quarter.
See, volume guidance has to improve. Volume has to improve. Right now, like this quarter, we have done 8%. And partly we lost to Chennai floods. But I think volume guidance has to improve. We should definitely look at 12 to 13% volume guidance year ahead, 16 to 17.
Okay. And realizations?
Realization are okay. Realization are okay. That is why you are seeing these numbers. And even if we pass on the benefit, we are not giving out of our pocket. We are giving out of the resultant cost reduction, which is happening because of cut in gas, which will happen from which has already happened from 1st of January, and some reduction in transport cost because the diesel cost has also come down. If you look at overall, and it will be passed on to the trade.
And Q4 should also improve to 12 to 13%, or that would be a little subdued, and then you see a ramp up in FY17 for volumes?
Q4 you will definitely see 10% plus volume growth, and at least, if not more, 100 point basis EBITDA growth. 100 basis points of EBITDA growth.
All right, Mr. Kajaria, we'll leave it on that note. Thanks very much for joining in and talking to us. So that's Kajaria Ceramics.